What's going on, my people? I know I'm a little early today. I figured come and chit chat with everybody, see how you guys are all doing. What's up? Eric Harper, man, really excited to have you in the boot camp class, man. I'm pumped. 954 area code. Are you in Florida? Oh man, so you got to come over to my house for a little bit. I'm over in Destin, but I usually have people over really whenever they want to come over. Oh, cool. Hey, Christian, how you doing, buddy? John, what's up? What's going on? Oh, yeah, oh, yeah, oh, yeah. Hey, Sherez, what's going on? Oh, man, it's good to see everybody. Guys, say hello for my Instagrams. What's going on? We got webinar time. Guys, I'm pumped to have everybody in class. We are going to be talking a little bit about some trading today, but it is already getting fired up. It's time to get in. Good. How'd you guys like class yesterday? Brian! I hear you, brother. Good, Charles. What's going on? Sweet. Sherez, what you been up to lately? Josh, is that you? Can you go on mute? Oh, yeah. Oh, yeah. Oh, Brian, is that you? Turn your video off. Carlo from Manila. What's up? What's up? Jake and Elisha in the house. Jacob, man, good to see you, brother. Christian, my friend, what's going on? Good. How was everybody's trading day? You know, mine was okay. We could talk about it. Somebody's asking if I can dig in on a little bit of one of the trades I took today. We got about a minute before webinar starts. We'll do that in the question and answer section. I had an okay day.
Test.
Hey, Brian, how are you?
Hey, I'm doing great, Big Daddy. How are you?
Good. How's your trading day?
Oh, man, it was good.
You going to be hopping on your video, or are you just going straight slide life?
I'm going to go straight slide light.
Okay. You're going to hide that pretty face.
Well, I'll let them take a look at me, but they'll only want to see me for about a split second.
Greetings from Fort Worth. Guys, welcome. Everybody, we are getting started here. I am pumped to have everybody in here for, well, frankly, just a couple different reasons. We don't do this very often. So, as you guys probably know, I always do the webinars. I'm a selfish bastard like that. Always have been. I love doing the webinars because, I like getting on and talking and teaching, and that's just my thing. I've always done that. But every blue moon, I bring on a trader or a student of mine that just has an amazing story to tell, but also an amazing and unique way of looking at the stock market. My mentor, Paul, had told me when I was a new trader, one important thing. He said, no matter what you learn, you can copy somebody else's style and learn from them. He goes, every great trader has their own unique perspective and spin on the markets, meaning that they take what they learn, the great ones, and then they make it their own. They adapt it to their personality, their job, their family, but just their style of what they're trying to get done. And so I've got one of my favorite students, Brian, coming on today to talk to you guys about his trading story, but also some of the stuff he's doing that you can use to actually go out and make money, right? Go out and actually do some stuff. And Brian's got just an awesome background. He's a military man from living from the Midwest, actually, but he's living down in H-Town, Houston, Texas, right now. He's run businesses. He's been in the military. He's traded, and now he's day trading at the open, like the style that I do, and also has a really cool option strategy that he uses to take consistent money out of the markets. And so I'm really pumped to have him on here because it's a rare occurrence for us to even do it. And I've been waiting to get this guy on the tube to talk to you guys for quite some time. He did a kick-ass job in our Dallas event. We had an in-person boot camp, which was it was an awesome success. We had spent 6 days in a conference room, huddled together, learning. And Brian was a huge part of that, teaching the new students some of the stuff that he does, and then mentoring them along with myself. So Brian, thank you for coming on and talking to us. I'm going to turn this thing over to you and make you the presenter and do what you got to do.
Sounds good.
Bum, bum, bum. Hold on here 1 second. So just take over the.
Got it?
Yeah. I see you.
All right, now I got to figure out how to get my screen up here.
All right. Dun, 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 dun. Hold on. It should send you a thing here.
Yeah,
see if
there
something
we go.
pops up.
Okay, got it.
Awesome. So guys, I am going to let Brian run the show here and do what we got to do. I'm going to be sitting here in the background, just watching and taking notes, and I will come on at the end. Me and Brian will answer questions about anything you want to do. Brian, I'll read off the questions to you, so you can just answer them away at the end. And thank you for doing this. And man, you look like Top Gun in those glasses right now.
Oh, too much, too fun. Hey guys, first of all, is my screen showing up?
Yeah.
All right, great.
Ready to go.
Guys, it is a true honor and privilege to be here in front of you guys. And don't ever let me sound like I'm speaking from authority, man, because I've struggled and I've went through all the strifes, and I'm here to tell you that if you stay consistent, you stay true, and you keep working hard, that you can do really well. So please forgive me. I'm a little taken back by the opportunity to get to speak to you, especially if you knew where I started from. So anyway, we'll go ahead and get started here. But anyway, I want to share my journey with you, and I enjoy sharing the things that I've learned, and I'm very thankful to those who share their knowledge with me. And Kanal and Paul, I won't even be bashful about hiding my affection for these guys in a masculine buddy sort of way, of course. But they're awesome, and they've really helped change my life, right? So I'm going to go through that. I'm going to speak kind of to the beginning trader, a little bit more to the beginning. I know there's a lot of people that have tremendous amounts of experience, and probably some that are more on the beginning side. So I'm going to tailor this down to a little bit more to the beginner, and we'll kind of go through. But basically, I always joke that when I started out, I would buy stocks like this, General Electric, and it's bottoming right now. But I'd buy high and basically get nervous, and I'd sell low. And the transformation into buying momentum stocks like CRM, right? And I've made a tremendous amount of money off of CRM, and it's a great stock and a good company. One of the things that I do a little bit different is I deal with fundamentals a lot. So that's a little bit different aspect. Price action is definitely king to me, but I do pay attention to fundamentals as well. I'll talk to you a little bit about that. Trading is very personal, and we tend to trade like our personalities, right? So if we're aggressive, we tend to trade aggressive. If we're conservative, we tend to trade conservative. And there are times that I do both, right? And Most of the times I'm more of a conservative guy, but sometimes, especially with day trading, I get a little too aggressive at times, right? So, but the nice thing about trading is there's all of these different styles and things that you can do to incorporate. So if you're not good at one thing, like as an example, say you're not really good at day trading, that doesn't mean that you're not going to be a good swing trader, or it doesn't mean that you can't be a good option seller, right? Like options. So I won't speak about options too much tonight, especially because just with the not understanding the different skill levels of everyone that's out there, it makes it a little more difficult on me. But I'm going to speak to you about some bread and butter things that I have done and that I do on a regular basis. But I do want to share some personal sides with you guys because it does fundamentally shape who we are as a trader. So if you know a little bit about my background and about my personality, it's going to help you understand how I trade and why I trade. And you can say, you know what, I'm nothing like this guy, and that's fine. You know, you might be really aggressive, and then you're a great day trader, and you know that's how it is. And I do day trade, but we'll talk a little bit about that. Certain things I'm good at in day trading, and some of the things I'm not. But my background, I'm from a small town, Willard, Ohio, about 12,000 people. And I mean, literally, if you blink when you drive through it, you miss it. I went to high school there and graduated in 1987. I spent some time in the United States Army. I was in the infantry. Hoorah for anybody that's in the service. And thank you. Graduated from the Ohio State University in 1995 with an engineering degree. I then graduated from Kent State University in 2000 with an executive MBA. But the funny thing with that education is that it never really taught me about the stock market, right? And to me, that was a shock. I mean, when you look at the number one builder of wealth in the world, and especially in the United States, it's the stock market. The stock market has helped more people to build wealth than any other instrument that has ever been created, right? And they never teach you about that. So to me, that was really surprising. But you know, I had some investment classes, sure, I did. You know, my MBA, and I took some finance classes, and I took some personal investing classes even. But really, it wasn't about how to increase your wealth actively. It was more very passive, right? Like you buy a good company and you hold it forever and it goes up, and that kind of thing's fine and dandy, right? Some people, they're satisfied with that. But you know, for others, what more? And really, that's about my personal journey, right? So a little bit about my family. I have a beautiful wife and I have a 6-year-old son. I am very proud of. And anyone who knows me knows that my family means the world to me, right? But why did I choose to learn to trade? Well, you know, I went to college. I got out. I had a good job. I went to General Motors. Was an engineer, and I moved up in the ranks. And they spun off some parts divisions and all these different things. I did all the right things, right? I did the 401k. I did my mutual funds, and my Roth IRAs. I try to max my accounts and do all the right things. But basically, as I got older, I started learning about the fees that are associated with this. Some of the mutual funds, right? They just kind of buy and they hold like a basket of stocks. They don't trade in, they don't trade out. They just ride them up, they ride them down. You're paying these guys sometimes 2, 3%. I mean, some of the fees are ridiculous, right? Whether they make money for you or not, you're still paying those fees. And so therefore, it was my thought. I thought, well, man, nobody's going to watch my money like I watch my money, right? And I want to grow my wealth. And so basically what I'd see is that I wasn't keeping up with the market. Maybe I made 10 or 12%. That's great. You know, now that's a good return, right? But the market was up 15 or 16%. And it was during those time periods I said, my goodness, man, there's got to be a better way, right? So I said, you know what? I think I'm a smart guy. I thought I was anyway. So I started buying stocks. So what did I buy? I bought things that I liked, and I bought them as they were up, right? So I buy them when they were going up, when they were high. Right when I should have been taking profits on something was when I was buying. Then I was holding them. Well, as people start taking profits, right? The smart guys were taking profits right as I was buying in. I was the dumb money back then, right? The smart money was taking profits. I'd start to get nervous. I'd either write them down and be incredibly nervous, or I would sell, right? So this is a good depiction of what my initial trading experience was like. I was basically a train wreck is what it was. I was buying high, I was selling low, I was very nervous. And, you know, thankfully I didn't do any real damage, right? Because, you know, I had some winners, I had some losers, I was treading water. The only thing I was doing was getting gray hair and, you know, just being nervous, basically. So I had to make some realizations in my life. And my realizations basically were, okay, and this was hard for me to admit, but I'm not as smart as I thought I was. All right. It was tough for a guy to admit, but I'm not as smart as I thought I was. The second thing is I'm ignorant about this game. And I said, all right, you got a couple options here. You either learn to play or you stop and you accept mediocrity in investing, right? And I think for all of my friends, and I think I've got probably about 10 people on here tonight that know me pretty well. I think most of those people will tell you that, I'm not a quitter, right? I tend to be more of a bulldog, especially when I'm learning things. So the journey began. I didn't really know how to start, but, I started reading some books. And, I know a lot of people don't like investing books. I actually read a pretty good book. It was called High Profit Candlestick Patterns by a guy by the name of Stephen Bigelow. And it taught me some candlestick patterns, and basically it taught me moving averages, right? And it was pretty good. But basically it was like kind of 300 pages to kind of teach you what Canal or Paul or someone like that teaches you in about 20 minutes, right? So it wasn't the most effective, efficient use of my time, although it was a good start for me, right? Because I just didn't know what else to do. So basically, with that knowledge, I made a few successful trades, but that wasn't enough, right? I had a little bit of taste of success, and I said, okay, there's a lot more I know I can do here. So I began to take some introductory seminars in trading, and I took some classes, and I took some on stocks and on options. And to be quite frank, it was ill spent a couple of $1,000s. It was terrible classes. I did not get a good education. They basically taught me that when a stock bounces off the 20 MA, you buy it. I mean, that was about it, right? Like it wasn't really good. And the option stuff was so incredibly basic. They didn't really teach you why things were happening or how they were happening. And it will spend a couple of thousand. I won't name the name of the company. I try to be positive about everything, but basically it's out of business now, and it's really no big surprise that it was. But I knew I needed more, and I'm a faithful person. I know we're all of different backgrounds, but I have a tremendous amount of faith, and I believe that God does not always give you what you want. And I think sometimes that's probably good, right? Because I probably couldn't handle everything that I wanted. But I do believe that if you keep looking, I think that God gives you what you need. And so I'm very thankful. But I found Bulls on Wall Street and Canal and Paul, right? I took the 60-day boot camp. I took 4 of my friends with me. As a matter of fact, it was pretty funny. I told the guys at Bulls on Wall Street, I said, hey, I want to talk to Big Daddy, man, before I sign up, right? Because I said, I've got 4 guys and coming with me. And I said, they're going to burn my boxer shorts with me in them if this class is bad. And, it was great, man. Sooner or later, next thing it wasn't long, I'm on the phone with him talking. And I knew enough about trading to know, man, this guy really knows his stuff, right? This is the real deal. So we were talking about subjects, things that he goes through, things that he studies. And it was funny because my buddies, and they trusted me, they had a lot of confidence in me. Thankfully, they know I'm a straight shooter. And they said, what do you think? I said, this is the real deal, right? So I was extremely pleased. We took the 60-day boot camp. The other thing I'm going to tell you is that trading is hard. I will never tell you that trading is easy and that it's simple. To this day, I get frustrated tremendously, and I think I'm very successful some days, right? But some days I'm not, And that's the thing we're going to talk about a lot is about risk to reward and those types of things. But I took the 60-day boot camp, and I took it multiple times. I mean, I was tenacious. I was a bulldog. I would take the class live, then I would watch the recorded class, then I would go back and I would take notes off the recorded class. I mean, it was like 3, 4 times I would end up watching the same class over and over again. I also joined the swing trade service with Paul, and that really helped me a lot, right? Because I could follow along with what a professional trader was doing. I also did Bulls Vision, so I would watch Canal trade live, and that really helped me, right? And I would see, because it was difficult for me. Anytime I took a loss, I felt demoralized, and so I could see Canal sometimes, and man, he'd win some trades, and he was calm and cool when he won, and when he lost a trade, he realized it wasn't a big deal. One of the reasons why is because the statistics, if you stick to the program and you stick to your rules and your sets, that over time the statistics are going to win, right? And they do, and we're going to talk about that. I also did a mentoring program. I think that's a logical next step, right? I think the mentoring is fantastic. So it's that's how I chose to go. Everybody is different, but it worked out fantastic. And finally, after all of the different trials and different types of classes, books, and watching YouTube videos and all this and that, I finally found something that worked. Well, a little bit about then and now. First of all, let me tell you right now, honestly, I was absolutely no overnight success at all. Please forgive me there. No overnight success. But I looked at thousands of charts, and I mean thousands. I used to lay on the sofa with my iPad. I had a charting program, and I would flip through charts, and I would just try to follow the flow. Look at the support and resistance levels, the moving average, the bounces, the consolidations, things that worked and things that did not work, right? I had failed trades. But one thing I can tell you is I was like a bulldog, man. When I bid on, I would not like a I was not gonna fail. And this wasn't in my vocabulary, right? But I had a lot of failed trades, and I admit that. Initially, what did I do? I traded way too big, way too big. And I wanted to be a home run hitter, and I wanted to hit it big. And unfortunately, this sounds kind of odd for a guy to say, but some of my initial trades that I traded really big, I won, right? And I didn't realize how out of my league basically I was. I'd have 1,000 shares of Tesla long. And man, I'm trading a $250 stock. I got 1,000 shares long. And I mean, it's like my second day trade, right? I just didn't realize, that kind of thing. And, anyway, so what happened? I was nervous. I was stopping out. I was making rash decisions, and I was out of my league. And, I found this picture. I thought this was pretty funny. This guy, the picture was that, he won a $181 million lottery. And just by luck, he finds the love of his life 2 days after hitting the lottery, right? Well, just like we know, he's kind of out of his league and things are going to end badly despite the money. Uh, it was going to be that way for me too. And it's kind of funny because here's a picture of my wife and I. We were married, and I put this picture up here, and she made the comment to me that, hey, that kind of looks like you and I anyway. So you can judge for yourself there. But that's my poor attempt at humor. But finally, I began to hold my own, right? I held my own trading, and what I finally started to see is I started to see green on the screen, right? And the ideas and the things that I did, I would think of an idea, and I have the idea, I try it, I do it again, and I keep trying, I do it again, and I kept doing it. And then guess what? Finally, you start to have some success, right? Everyone can sit and talk to you, and they can teach you the patterns, and they can teach you all this and that. You've got to be tenacious, and you have to keep trying it. And sometimes things don't work, right? But that doesn't mean that you automatically abandon it. I will also tell you too that everything that Canal and Bulls on Wall Street taught me, I see work in the market, right? But that doesn't necessarily mean that I trade those things well. But it's good that I have the knowledge, right? Like breakouts. I see flat top breakouts all the time, right? I don't trade flat top breakouts well. As they start to pull back and retrace, sometimes I get a little bit nervous, and sometimes they'll break back into that battle zone, that previous resistance that's becoming support. They'll break under a little bit. I'll stop out. I'll take a small loss. That's okay, and then it'll take off again, right? So I don't typically trade those. But however, first thing in the morning, that first half an hour in the morning, where it's like the Wild West, man, stocks are flying. I mean, you'll literally get, $1, $2 moves within a minute, right? Believe it or not, I trade that really well. And also, that's when I buy breakouts the most, right? They work very good for me in the morning. So what you're going to find is that all of these things work, but some of the things you're going to naturally gravitate to. And that's something that's happened to me, right? I've naturally gravitated towards certain things that work and certain things that I feel comfortable with. And that's what's important. So some of the biggest strengths, I am going to get to some trading stuff. So if I'm spending a little bit too much time on some of the personal stuff, please forgive me. I'm going to start to get into more of the trading aspects. But it took me a while. But then finally, I realized what I was good at. And what was I good at? The strengths, right? First of all, number one, I refuse to quit. Never in my life have I been a quitter. I just haven't been. The second thing, I saw charts and I saw patterns really well, right? And that was a strength that I had. And I literally looked at thousands of charts. If you're a trader and if you're not looking at thousands of charts, you're not a trader and you're not going to be a good trader, right? It's how you look at them. And it's easy to see after the fact. It's when the trade is developing. It's not like a doctor in medical school before he becomes a physician picks up an MRI and goes, oh, he's got a contusion of the, blah, blah, blah. That doesn't happen. He looks at hundreds of MRIs before things start to make sense to him, and he starts to see the subtleties, right? And it's kind of similar for that of a trader. You have to look at 1,000 charts, but then once you do, all of a sudden things start to click, right? and it amazes people sometimes. I mean, I've been talking to some of my friends before, and I've been like, hey, the market's about to pull back, right? And sure enough, man, the next 5 minute candle, it'll turn red. And I'm like, it's not done yet. It's going to go down more. And people are amazed by that, right? But it's a skill that truly can be learned. It's at resistance, it's hitting a gap, whatever. It's oversold, it's out of the Bollinger Band. You start to get an inverted hammer. You probably know that you're in the mark for a pullback. And of course, it is, and it's a neat feeling, right? And the fact that you can benefit and that you can actually make money from these skills, and it's something that is actually enjoyable, right? I mean, who doesn't enjoy making some capital, and especially for the right reasons, right? But basically, what I realized is that I was a base hitter. I was not a home run hitter, and it was really, really hard for me to accept at first, right? But I mean, big baseball fan. I know a lot of guys are football fans, so I apologize, but it's one of those things. I've just been a baseball fan my whole life. I grew up in Ohio, lived in Michigan, had season tickets to Tigers. My whole life I was going to Tigers games, even when I lived in Ohio, see the Indians, the Reds, and whatnot. But Pete Rose is an example, right? If anybody knows Pete Rose, and forget the whole gambling thing and not being in the Hall of Fame, right? This guy he was a scrapper. I mean, he would hit a bobbled ball off his bat sometimes that he knew he was going to get thrown out at first base. But did anybody ever see him dog his way to first base? Man, he ran like someone was trying to kill him, right? He never quit. And that's how we as traders have to be, right? We always have to hustle. You can't roll over and die. You got to keep going. You got to keep trying, and you got to give it everything in order to be successful. Because there's too many obstacles, and it's difficult. I will never tell you that it's easy. And I know I've even heard I call him Big Daddy, right? It's just something you'll have to deal with. I'm sorry, but it's funny. I've called him Big Daddy ever since I met him, and that's how I refer to Canal. But Big Daddy will tell you, man, it's hard, right? It's not an easy thing, but it's something that can be learned. But anyway, the point I want to try to make here too is that a difference between a hitter in the Major League Baseball who hits a 265 and a hitter who hits a 300 is literally one hit a week, right? One hit a week between 265 hitter and a 300 hitter. But in difference of salary, it's well over $1 million a year. And you say, well, Brian, what's this got to do with baseball with like trading, right? The point I'm trying to make is that sometimes that little difference, that little subtlety that you have, you can change something just a little bit to make you slightly more successful, and your profitability will start to skyrocket. And that was one of the things that was very interesting to me. So let me give you an example. And I believe, hey, Josh, ping me on Hangouts. I want to make sure, is the camera still on me too? Can you see me? Okay. Okay, yeah, so you can still see me in the camera. Okay. So we talked about risk to reward. Okay, so if you risk $2, okay, to make $1, it's obvious that's not very good, right? Because you're risking a lot to make a little, okay? But if your reward is $2 for $1 of risk, right? So I'm going to risk $1, but I want to make $2. You only have to be right 33% of the time. Now I want you to stop and think about that. You can be right 33% of the time. Forget commissions. All right, what, $5 a trade or whatever it is, $1 a trade, whatever. But okay, and it's simple, right? Because if you look, okay, I lose a trade. Oh, there's a camera. I lose a trade. Okay, so there's $2 lost, but I win a trade, right? All right. So you won two, you've lost two, you've just broken even, you've made 3 trades. You only have to be right 33% of the time to break even. Now at 1.75 reward to risk, you have to be right 37% of the time. At 1.5 to 1, you have to be right 40% of the time, right? So, and at 1 to 1, if you're risking 1 to make 1, you have to be right 50% of the time. But what I was doing is I was operating more over in here, right? Like I was risking $1 to try to make $1 in a stock, right? I had to be right 50% of the time. And in the beginning, I didn't have that skill. So I was treading water a lot. Once I really started to let my winners run, and I would cut my losers, and I knew where to stop out at, and I started taking this 2 to 1, even though I was only right roughly 50% of the time, man, I started to kill it in the market, right? And that's when I realized, wow, what a difference. So I'm a base hitter. I'm more of a Pete Rose guy, right? If I try to go for a home run, I end up striking out a lot. The other thing that I really had to stop and take some rationalization over was the concept of money. Okay. I've been blessed. I've worked hard. I've saved. I've accumulated some wealth, right? But the thing that I really had to realize is that $200 a day, I want you to stop and think about this. I've heard people saying, man, 200 bucks a day, man, I was up 200 bucks, it's $50,000 a year, right? It's $1,000 a week. Let's just call it 50 weeks in a year, roughly 2 weeks holidays, right? So $200 a day, 50,000 a year. $400 a day is $100,000 a year. $800 a day is 200,000 a year, and 1,000 a day is roughly 220,000 in a year, roughly, right? I have been up $800 on a trade, on a day trade. I've been up 800, and I've already hit my risk to reward. And because I wanted that magic pinnacle of $1,000, I haven't taken my profit, even though I've been up. I've had it retrace, and I've lost everything. And I remember I looked at myself and I said, man, are you crazy? You're walking away from $200,000 a year, man. $200,000 a year for pushing some buttons in a matter of minutes. And I was telling myself that wasn't good enough. Man, you know what? The arrogance behind that, right? So when I sit down, I actually ran through the numbers, and Big Daddy's the one. I remember we talked about it one time, and he told me the story, man. A guy was up $400, and he said, well, Kanal, it's only $400. And I remember Kanal, it was making me laugh so hard. He's like, dude, you don't even have a car, you know? You're $100,000 a year equivalency, you're walking away from it. You don't even have a car, right? And it really had me laughing, and it got me thinking about my own personal situations. So I'm telling you, like being around traders and people who know what they're doing, it's just an awesome thing, right? But I didn't have to try to hit home runs to do well. I was a base hitter, not a home run hitter. And again, it's not who I wanted to be, but I learned to embrace it. Man, what a difference it's made, right? So not everything will work for you. You got to find what works for you. Just like I said, Kanal's going to teach you 1,000 things, right? And they're going to work for some people. For some people, it's not going to fit your personality. And that's okay, because in trading, there's something for everything. We'll talk a little bit more now about how and what I trade. So first and foremost, make no mistake about it, my bread and my butter, I am a swing trader. Okay, I'm a swing trader. I seek to make 5 to 15% in a matter of days. I want to turn my money. I want to build my wealth, right? I want to be into a stock for, maybe a day, very exceptional, to maybe 5 days to 2 weeks to 3 weeks, right? And I want to turn my capital. I want to make that 5 to 15% in a couple of days, right? Or a couple of weeks at the most. The next thing is I'm an option hitter, or excuse me, an option trader. And this is kind of the base hit again and again. I posted on Facebook the other day, I was trading options. 2 days, I made a 41% return, right? So 41%, that's fantastic to me. 2 days, think about that. Most people would be happy to make that in a year. I bought some call options, okay? I very seldomly buy options. I do if I think I'm going to get a quick move fast, but basically I like to sell options. And I know it's a little bit different, right? But I'm an option trader, and it's base hit, base hit, base hit. It's almost like collecting a paycheck. So I can sell 4 or 5 contracts for $500. I can do that 2 times a week. I can make a couple $1,000s a week, and it's about like cash in a paycheck, right? And it's amazing with very high success rates. And one of the reasons why that I do, and this is from an Investopedia, and I hope you can see this print here, but basically when you look at the percent of expired option contracts, and this was a little bit dated, it was from 97 and 99, but basically markets have not changed that much. What worked back then still works today. About 82% of those put options expired worthless. Now that's at expiration. You don't have to hold them till expiration. And that's one of the things as an option trader, I hardly ever hold the expiration if I'm buying. But if you're a seller, 82% of the times, if you're buying, if you hold it to expiration, 82% of the time it's going to be worthless. Does that sound like a good investment to you? Absolutely not, right? That's why I like to sell options, because if 82% of the time they expire worthless, is it better to buy them or is it better to sell them? Because when I sell them, I've already got the money. It expires worthless, that's my money. I keep it. So that's something that's very important to think about. But let's see. anyway, I seek to make about 35 to 40% returns in a couple months when I sell options. I place small trades weekly for income and for wealth building. It's regular, it's steady, it's repeatable, and with very high success rates. To be in that 80 to 85% success rate range is very possible if you use technical analysis and you look at fundamentals, right? But also, I'm a part-time day trader. This is my alter ego, right? I do work, and people say, well, why do you work, Brian, if you can trade and you can be successful? One of the things that I found is that I actually trade a whole lot different because I have stayed home and I have traded, and I loved it, right? But the pressure of, geez, my son goes to a Christian school, right? So, okay, I've got his tuitions due. I've got my insurance due for the cars. I've got this due. I've got this due, right? When I work, I'm just a whole lot more relaxed, right? And I can do what I do in about an hour a day. And so it fits my schedule. If you want to trade full time, I think that's wonderful, right? And I was blessed to have that opportunity to do that. But the other thing too is my wife would come home and I was sitting in front of my terminals all day, right? Like trading, and I would kill it. I did really well in the market. I mean, it was very lucrative for me. But when she came home, man, I was just talking her ear off because I've been by myself all day, right? And so I was so happy when she came home and she'd tell me, honey, I love you. Man, I want to decompress, right? Like, I get home from work, I want to relax. I'm like, you're killing me. So it's just differences in personality, right? But anyway, for talking about day trading, it's kind of the home run hitter versus the base hitter. I want to make money fast. I'm in and out. I'm watching patterns. I'm using 1 minute and 5 minute charts. And like I said before, unbelievably, I trade the open the best. After about a half hour, I'm out. If I tend to sit all day, I'll make a pile of money in the morning and then I give it back all afternoon if I sit. I always joke, Kanal probably smack me. It probably sounds sexist, but the market to me in the morning is like a beautiful girl. She's got her Sunday dress on, her makeup, her hair's curled. She's ready to go to church. Everything is great, right? After about that first hour, half hour, it's more like somebody who's been at the bar drinking all night. Mascara's running. She's crying. She's got puke in her hair. Her dress is all messed up and her heels broke, right? So the market just gets kind of muddled to me. Now, some people sit and they trade all day and they do wonderful, right? But lastly, I'm a position trader. So basically, I'm seeking to increase my wealth with slow and lucrative returns as well, about 100% in 3 month or longer terms. And the key to position trading I'm going to talk to you about is I'm seeking value. So I'm looking for damaged stocks. I'm not looking for screwed up companies. Okay. So that's the big key there. I'm an avid history of students, right? And I always say that if I've seen further, it's only by standing on the shoulder of giants. I think I probably embarrass Kanal sometimes with my admiration for him, but he and Paul literally changed my life, right? So I want to also tell you, I want to give those guys a tremendous amount of credit, but just about everything that I'm showing you, nothing here is an original thought of mine, okay? I've learned it from these guys, right? So all I'm kind of do is parroting. I'm acting like a parrot, and sometimes I change things a little bit, maybe the way I teach or the way I'm showing something like that, right? But not really too much of an original thought. So I want to make sure that all credit goes to those guys. I want to talk to you about position trading. I know a lot of you guys, when I say guys, please forgive me, but everyone out there, a lot of people like day trading, right? So and I do too. It's fast, it's fun, it's great. But also with accounts, sometimes it's good to have a portion of your account or a specific account that you day trade, one that you position trade, maybe one that you swing trade, right? So that you can, not leverage all of your capital on a day trade, but spread it out, right? And kind of spread the risk in different areas, that kind of thing. So position trading was something that I do as well with a portion of my account. So basically what I'm doing here is I'm tracking and I'm looking for signals, right? And what I want you to remember is the more oversold, the better. That is so important for what I'm going to show you with the price action. All right. So what am I looking when I say oversold? And once again, I'm going to kind of tailor this to somebody who's not as experienced as far as a trader. But if you look at this is actually a sector, not a stock, but this is steel. You can see the steel was up here, and this level was at about 2,000, right? And if you look, it went all the way down to 800, right? That's oversold. It means it's been sold off hard for a very long time. if it was at 2000 and it went to like 1940 or something like that, that's not really oversold. It's not a big sell-off, and we'll talk more about that later. But the more oversold, the more important this is, and the better that the price action in this works. So what am I looking for? And I've got some graphics to explain to this, but I'm looking for bullish engulfing candles. I'm looking for hammer candles. I'm looking for BACs. This is my another poor attempt at humor, but I came up with BAC. And what's BAC stand for? It stands for big ass candle, right? It also, I'm looking for gap ups, and I want everything to be obvious and strong. One of the reasons why is because if it's obvious to me, it's going to be obvious to everyone out there, right? And I want you to think about that. If you have to look at something and if you have to go, man, is that a bullish engulfing, or is that a hammer? Is that this kind of pattern? Is it that kind of pattern? If it's not clear to you, stay away from it. Because if it's obvious to you, it's going to be obvious to every other trader. And I'll tell you what, the reason that these things work is because traders are looking for the same kind of things, right? People who are in the market and they know and understand the market, they're all going to be looking for the same thing. But one of the things I'm going to talk to you about as well is volume capitulation. It's a big word, but basically it's when the dumb money runs. And what we have to be saying is, well, okay, if the dumb money's running, right? So basically these things are tanking like right at the bottom, and not in this sector, but in another one I'm going to show you. Sometimes it's really prevalent, other times it's less prevalent. But a lot of times you'll see these huge red volume spikes. And I do have a chart, and it's going to be obvious when I show it to you. When you see these huge red volume spikes, basically what's happening, it's the fleecing, right? All the sheep are being slaughtered. All the poor people who really don't know any better are selling their shares, and the smart money is doing the buying at that period, right? But you have to ask yourself, geez, if I'm selling down here, who's buying, right? Sometimes it could be short covering, right? Obviously. But when you see these volume patterns, and by the amount of volume, you'll understand what I'm talking about. So basically on the daily chart, what you're seeing is you're seeing lower highs and lower lows, right? So if you look, you come down, you make a low, you come down, you make a lower low, you come down, you make a lower low. Effectively, you're in a downtrend. All your moving averages are moving down, right? And then what we're looking for the bottoms, right? And how do we recognize a bottom? This sounds pretty obvious, right? Like, oh, well, you can see, you see a bottom. All of a sudden, these lower lows and lower highs start to become higher highs and higher lows. When you come out of these, the first pullbacks, right? Like you look at steel, you see how it starts to run up, you see how it gets pulled back right here, and then it gets bought up, right? And it starts to go up again. Very significant point right here. So even if you don't time the bottom down in here, it comes up when it makes this pullback and it starts to get bought up, you can catch these, right? So don't chase. My point is don't chase, right? Kanal has pounded it into me again and again and again. Yeah, I remember he used to say in Kanal, I apologize, I tell you, like I'm like a parrot. I know I am. But he used to tell me, you chase, you die. He tells everyone this. You chase, you die. You chase, you will work in a cubicle forever. You chase, you're a loser, right? You can tell I've heard it enough times, right? But and that's it. But so when you start to see these lower lows and lower highs become higher highs and higher lows, all of a sudden you know that that's when things have changed, right? All of a sudden too, and I'm looking at a weekly chart here, and this is actually steel. You can see steel coming down here. Look at your volume pattern. Red represents the volume on the higher, or on the red on the selling day is a selling or a down day, and green volume bars are when the stock actually closed higher, correct? So you see this, look at the volume all of a sudden coming in right here as well. It's probably hard for you to see that number. That's at 500 million shares, okay? Before that, it was at 250 million shares. So the volume in a week basically doubled, and it's green, right? Who's buying 250 million shares? Is it retail traders like you and me? No, it's not. It's the big guys, right? I always say all I'm trying to do is I'm trying to be like a sucker fish off the side of a whale, right? I want to follow the whales. I'm trying to walk in the elephant's footsteps, right? That's all I'm trying to do when I position trade. But what's so cool about it is they leave tracks. And if you know what to look for, you can follow those tracks. And here, this is actually US Steel, the actual company. And look at the volume right here coming in. man, anyone can see that big spike, right? It's shooting up. The more volume you have behind a move, the more believable it is. If you're seeing price action without volume, you should always be suspect, right? Be leery of it. But when you see this volume behind it, that's commitment. And you can see that US steel went from, I think, around $6 all the way up to around $40 in just in not too long of a period. I mean, what a fantastic move, right? And if you're watching this, it's pretty evident now. Now, once again, it's easier to see when you're looking back, but these are things that you can learn. The last thing I want to talk to you about here, and I've mentioned already, is capitulation. But what is capitulation? It's the action of surrendering or ceasing to resist an opponent or demand. And so a lot of the times, and in some of these charts I'll show you, you're going to see the capitulation. It's going to be very obvious. Well, I'm going to talk to you about planning your trade a little bit. What you want to do is you want to budget your account. So what I do is, you know, I have a portion for swing trading, day trading, I options trade, and I have positions. So how much per position? So as an example, if you're position trading, so you're not just trying to time the bottom perfect, but you're buying a little bit, and if it get where you think might be a temporary bottom, if it goes a little bit lower, you're going to buy a little bit more, and if it goes a little bit more, then you're going to buy some more. Your goal is to get the lowest possible cost average over time, right? Don't buy all at once. And I hear the guys on TV too, on CNBC say that. And it's good advice, right? So if you're going to position trade, you know, split it into quarters. And I'm going to show you an actual position trade that I did later. And obviously it worked out well, or I probably wouldn't be talking about it. I'm just kidding. I actually admit my failures too. But so split it into quarters or split it into thirds what you're going to buy. Position your account up and plan ahead. So many people, when they're position trading, what they do is they take too big of an initial buy. And then after that, it starts going down. They start getting nervous. They can't cost average down. So like if a stock is at $100, say it goes to $50, you buy 100 shares, right? Well, when it goes down to, if it goes down to $25, you can buy 200 shares, right? Your cost average is much closer to your 25 than it is to the 50 because of the multiple of shares, but yet you've spent about the same amount of money. I hope that cost average makes some examples. So that's what you want to do in your position trading, right? I'm also going to talk to you about trying to time bottoms. But one of the things that you do is you look for some previous support levels, right? I'm going to show you support and resistance levels. Kunal's already talked about them. But also you want to look at what are the volume patterns, right? You want to look at rationale, I guess. So there we go. Also in the news, you know, what's going on in the world? This is one of the things that I try to do, and I think that has really helped my success rates. I believe in not arrogance because I'm the most humble person, but my success rates tend to be a little bit higher than many traders. One of the reasons why is because I don't just look at the price action, although I will tell you right now, price action rules. It is the most single important thing, price action and volume. But I also try to think about rationally what's going on in the world, right? Like our interest rates going up. What's the supply situation? You know, what's the political situation? Are there things like that? And I screw up all the time. I remember I had made an option trade on wind, and it was right with all the Chinese economy was starting to go down. I knew that my position on wind was affected by their profits in Macau. Macau, one of the major gambling centers, is from China, right? Everyone from China goes to Macau. So if the Chinese economy is starting to tank, why did I take that trade on wind in a long position, right? I should have known better, right? So these things will help you. You know, so pay attention to things that are going on in the news in the world. Fundamental changes are big in a stock, right? Like it's something fundamentally changed about a technology. What about their earnings? You know, earnings and the revenue are the number one drivers in a stock, right? And the expectations for those earnings. So earnings are hugely important. So watch for earnings changes. If a stock has been dying forever and all of a sudden they come out and kill it some quarter, because we've been around long enough to know that most things are cyclical, right? They may be terrible now, like automobiles, but you know, in another couple of years, you know, markets change or whatnot. Automobiles are actually doing really good right now. But, you know, 2007, those timeframes, they weren't. So we look at earnings a lot. Also look at leaderships and companies, right? Like is a new CEO come in? Look at the chip manufacturers, you know, and some of the changes in leadership and what's happened there, right? Like Intel used to rock the world, right? Best in the world. Well, look at some of the chip manufacturers now, and you'll see that there's one that's just killing it, right? New technology. Also look at elections. When this previous election, I'm going to try to stay away from politics, although I'm going to tell you I'm conservative right now. There it came out. When you look at some of the trade things, and you look at some of the tax incentives, and you look at legislation, right, that is more business friendly or whatnot, be aware of those situations and will affect things. Also, look global demands, right? Like, how's China doing? What products are coming from China? What about India? What things are happening in Africa? Like, what about minerals and like silver and those types of things? So any education that you have is going to help you, but always follow the price action. The end game is to get the lowest cost average possible. So you got to decide too, where you're going to sell at, right? So when you sell, this is what I see. I see a lot of people go up, they make a little bit of money, and they'll dump the whole thing. You don't have to do that. Scale out, right? Like, I talked to you about buying a little bit. If it goes down significantly, buy a little bit more, cost average down, right? Same thing when you're selling. You don't have to sell it all at once. Take 25% off. And a lot of the guys that I talk to, good friends of mine, right? They'll be up significantly. They won't take any off, and all of a sudden, man, it'll pull back hard on them, right? Like, look at Tesla. Look what just happened to Tesla. A good friend of mine has a significant number of shares in Tesla. Man, didn't take much off, and now he's kicking himself, right? So don't ever think that a stock's not going to pull back, because traders and institutions, the big traders, they have no emotional attachment to that stock whatsoever. They will take profits. They will pull back. And that's the other thing too. Big Daddy says, don't chase. That's a perfect example. If that stock's running and if you've missed it, just wait. You're going to get a shot at it. Guaranteed, you are going to get a shot at it. Because if you go ahead and you jump in high, there's a good chance that you're getting in right when the smart money is going to start taking profits, and you're going to be left holding the bag, right? And nobody wants to be there. The last thing I'm going to tell you is ignore the experts. This is something that's very hard for me initially, but I would listen to the television. I'd listen to some of these guys talking, and they would influence my decisions like really big, right? Like, I listen to the news, but I want to know what's going on in the world, and I want to form my own opinions. And this is an actual trade that I took right here. And this is actually a sector for real estate. But I want you to look at real estate. And this is the sector, once again, so it's an average of all of the real estate stocks, basically, right? Of REITs. So it was at about 735, just a level, 735. This thing is diving, right? You can see it dive. You can see it goes down, it bounces. Look at this bounce right here. It bounced right to the 20 moving average, right? 20 exponential. See how it bounces up? It hits that green line right to the 20 exponential. Comes down again, right? Bounces back up. You can see how the 9 exponential is fitting right over it, right? Fitting right over it. Starts to gap around, comes up, tries to make a bounce, comes back down, and then fails, right? Now, I want you to look at something. What's happening in this time frame right here? All of the talk and all of the news channels, CNBC, Fox Business, Bloomberg, everybody, they're all trashing real estate. Fed's raising rates, Fed's raising rates. So when they start to raise rates, what happens? Mortgage rates go up. People start to buy less, right? All of a sudden, businesses, same thing. Real estate starts to get more expensive. They're financing all this and that, right? But look what happens right down here. See the significant red volume right here? Look at that. It times the bottom virtually perfect, almost perfect, right? You can see. The other thing is, look what you see right here, and I hope that this shows up well enough. You see a hammer. So what happens is you see a long wick at the bottom, and you see a head at the top like a hammer, right? It's called a hammer candle. I know, pretty creative, huh? That signals a lot after a big sell-off. You see these a lot in bottoms. I bought real estate right here. I know, right? Like, am I crazy? This thing's diving. CNBC's telling me not to buy real estate. It's tanking. Bloomberg, all of these guys. But look at the price action, right? It's telling me something else. Sooner or later, things start to become a big enough value that the smart money is going to be interested. And obviously they did. So I was buying real estate. I was buying triple leverage ETFs. I think it's DRN on real estate. And look what happened. Immediately, real estate started to go up, right? Never broke that low again. And you can see where it is today. So that's why I'm saying just be careful about listening to the experts. Pay attention to the charts and the price action. They're key. But you still have to bring in the news and fundamentally what's going on. I'm going to talk to you a little bit about levels and signals as well, right? This is marathon oil. And some of my friends on here are probably chuckling because they'll remember I was a marathon guy, right? Like oil was tanking. I'd worked for an oil field service company actually, and it was at $100 a barrel, right? Everything was great. And next thing you know, months later, oil was at $26. All right, marathon, and you can see what happens. It goes down. You can see the wick of the candle. It broke that support level and it flushed, right? You can see it bounces off the support again, bounces off this yellow line that I drew. It's a support level, goes back up, comes over, it breaks it. When things break support, they typically flush, right? It flushes again. It holds support for a little bit, tries to bounce. Look at the 20 exponential capping it right there. Moving averages are rolling over, bringing it down. And once again, it breaks, it goes down, and flushes. All of a sudden, down in here at around this $14, $10 level, down around in here, I knew enough about the market that I knew that $26 oil was unsustainable. I knew that $35 oil was unsustainable. Pretty soon, there was going to be enough capacity taken out. Now I had my plan of attack, right? So now I'm watching marathon. One of the things that I want to point you to too is I want you to see right in here. You can see how this thing is flushing, right? Here's some capitulation. Notice that the volume is high, but the price isn't moving much. Seeing this band like right in here, price is not moving. Like up here, it's diving, right? Look at the red selling. See how significant the red selling is in here? But the price is not moving very much, right? That's telling you what happened, that you're entering into capitulation, that the sheep are fleeing. And it's kind of sad, really, when you think about it, right? But people are selling, and they're scared. But who's buying? There's that capitulation, that turnover event, right? All of a sudden now you can see, look at the volume. Look at this huge green volume. Something had changed, right? So I was cost averaging right in here. I had a cost average somewhere around $7 on Marathon, which my cost average was right down into this area, right? And I remember coming home and I remember my wife asking me, we were having dinner and she said, honey, are you sure? I remember I looked at her and I said, no, I'm not. And I think I scared her to death, right? But I told her, I said, man, it's the chart's showing me the right things to do, right? I believe that I'm right, but Kristen, I can't promise you. You know what I mean? And nobody would have went hungry, but I mean, I loaded up, man. I was hitting it hard, and you can see what happened, right? It went up. I ended up selling. I think you see the peak in this chart, and these are weekly. These are weekly candles, right? I like weeklies that kind of clean the noise up. It went up to around 19. I think I sold around 16.50. But still, stop and think about that. I was cost average around $6 or $7, and I sold it at 16.50. Right? It was an amazing trade, and to this day, it was one of the biggest trades I've ever made in my life. So I was pretty pleased, and it was all because of the experience and the knowledge that Bulls on Wall Street and Canal had helped give me. So when we talk about related items too, I want to show you that the things that I'm talking about work not just for stocks and for equities, but they also work for futures contracts and they also work for currency. So here I was watching crude oil, right? You can see crude oil flush, comes down. Look at this big hammer candle, like right here, right? You see you get a temporary bounce. Look at the wicks up here. You start to see like wicks up high, right? You start to see wicks up high, inverted hammers after a nice run up. It's probably time to go, right? And look, it rolls over. See a strong candle here and it bounces. Now remember, I'm looking at a weekly, but what did I see here? I saw it come down after a big long run, right? Was that, remember I told you at $26? You can see $25 level right here. You can see the hammer candle right here. It bounces. This is a weekly, right? Look at the 9 exponential. So regardless of the time frames, whether you're looking at a daily or a weekly, many of these same things that you'll be taught happen again and again, right? And they're just microcosms, like little cubes making big cubes, right? Some of the things that we see in a 1 minute, the patterns are the same as on a 5 minute or on an hourly, and then a daily, and then a weekly chart. So you can see right down here along sell-off, we see this hammer candle, goes up to the 9, bounces. Look at this, come right down to that same level again at that $26 level. We see another hammer. This time it's red, right? but it's a W pattern. It's a double bottom. It's holding that support level. And you look, you can see it took off and it never looked back. So the things that you're learning don't just apply to equities, they apply to futures as well. So I talked to you about strength of candles at expected support levels. This is one of the things that I want to show you. I talked to you earlier about hammer candles, bullish engulfing candles, gap ups, and what I call big ass candles or BACs, right? Now what I'm going to do is I want to show you currency. And you're like, is this guy crazy? Yes, I am. But basically, here's the euro and the US dollar pair, right? It's a weekly. You can see this applies to everything. You can see how we have a big sell-off, right? Right here. Look at this beautiful bear flag. You see, you draw a straight line right across here. Once it breaks that, it flushes, right? Look at this, it flushes. Finally, you see a pretty strong candle, have a little bit of a top on it, but we get some bounces. You see the 9 exponential on the weekly holding it down. Negative sloped moving average tend to act as resistance when price is under, right? So basically it pulls it back down, comes almost to the support level, see a relatively strong candle, and we see a bounce up. Look at the approximate resistance level here. Here we have resistance again, right? So you see this resistance across here. You get this pullback. Look at the strength of this candle here. Not really a bullish engulfing, but basically a BAC. It moves sideways and it runs up again, right? This is kind of signaling a bottom. See how the resistance level or support levels holding across the bottom? This is why it's important to recognize the strength of the candles. Because if you have a strong candle at a support level, it tends to, everyone notices it, right? And it's going to work better. You're going to be significantly higher percentage of winning trades. Now, something very interesting happened right here. Basically, what happened is it started to break under that resistance level, or support level, excuse me. Every time that a support level gets broken, if it gets remounted back, you can see that price went down to here and then it remounts back above that level. It takes a tremendous amount of strength for price action to overcome those. And so when you see that, it's okay. You can get stopped out here. Don't hang your head in shame, because if you would have had the courage to re-enter again, look at your potential profit. Remember that 2-to-1 risk to reward? You lose one, my goodness, look what you could have made here on this run up, right? So everything runs the same, right? Stocks will run up, they consolidate, they run up again. Or else they'll run up, they pull back, and then they run up again. These systems are all the same, whether it's currency, futures, stocks, you see the same thing again and again. So now, looking at these candles, right? I talked to you about hammer candles. Remember, the more oversold, the more important, right? Look at CE. Big rundown. What do you see right here? See the hammer candle? And then you can see how it started to lift off and go back up. Here's American Axle. This is a bullish engulfing candle. Once again, it's important. You have that big run down. If you only run down a couple of days or a couple of weeks and then you see the candle, it's not that stretched, right? So Kanal talks about like rubber band snapbacks and all of these other things that he's going to teach you. These work, and they work again and again. You have this bullish engulfing, big run down, you see a bullish engulfing candle, and you can see price action starts to lift up, right? You look at the gap ups as well, and I'm sorry, this is not a great example of a gap up. It was hard for me to find one, but I actually took this trade on Alaska Airlines. You can see Alaska Airlines had a pretty nice pullback, was running down here, right? Kind of started to hold this level and lift up, but when I saw this gap up, can you see that gap up right there, the gap from there to there? And look at the volume coming in. See how it was higher volume on that green? That led me, as I talked about earlier with volume, to believe that the move was real, it was sustainable. And you can see how Alaska Airlines came up, right? This 9 exponential moving average that's coming down, that's tending to act as resistance with price under it. Now it's acting as support. See how the stock moves sideways until that 9 exponential comes up, and then look at it. Now all of a sudden it's supporting it and it takes off, right? So these are things that you learn over and over again. Here's a BAC. I'm going to trademark that too, by the way. But we see a big run down. Look at this big ass candle right here, and this is on Timken Steel. And all of a sudden you can see that the stock starts to lift up, right? So the strength of the candle at expected support is extremely important. Hey, Josh, give me a cue on Hangouts, man. Am I going too slow or am I doing okay? You can tell me to speed up, slow down, making sure you can still see me and hear me all right? All right, cool. Thank you, my friend. I met Josh in Dallas, and I'm telling you what, man, he's a great trader. And one of the things I loved about trading, right, is that he taught me something with flags and about buying. It's something I never thought of. So you can always learn something, and that's what's so fun, right? It's just fun to be around people who love the same things and traders, and there's always got ideas and wonderful things. What I want to show you now is this is kind of more about timing a bottom. So this is a reversal anatomy kind of in summary. What I wanted to do is I wanted to give you one chart that kind of showed everything that I was trying to talk to you about. And I like to use weekly charts a lot. We'll talk about this a lot. When I'm position trading, I like weekly. They take a ton of noise away. A lot of people are like, are you kidding me, man? Like I fall asleep looking at weeklies. I'm telling you, weekly charts are outstanding. I am convinced as well, someone will have to convince me otherwise. The big guys, I believe, trade on weekly candles. One of the reasons why is because if they're buying hundreds of thousands of shares, they can't buy all their shares at one time. Like we may buy 1,000 shares or 500 shares or 100 shares, right? They can't buy 100,000 shares, 1,000,000 shares, whatever, all at once. They would chase their own price up, right? They would put so much buying pressure on that they would run it up. So I think they use weekly candles, and I think they trade over an extended period of time, right? And they buy a little bit. They maybe buy 10,000 shares, 5,000 shares. They wait a little bit. They buy another 5,000. They're cost averaging in. They're doing all this and that. And the weeklies, and one of the reasons why is because you see the moving averages work very well in the weeklies. You see the patterns. They take a lot of noise out. Typically what I do is I use the weekly, but I set the daily right beside of it. So when I'm getting to a support level on the weekly, I'm looking at my daily to see the trigger, right? All of a sudden, like if I'm at a support level and the weekly shows me that support level really well, but I'm looking at my daily chart and I see a hammer, man, bam, it's go time, right? Let's rock and roll. And Kanal really preaches that a lot. He's the one that taught me that. Whether you're looking at daily and weekly charts or whether you're looking at 5-minute and daily in your day trading, right? Those alignment of time frames that he teaches you are so vital. And you can apply this across so many different things. But here we look at an ETF. This is BRZU. Paul had actually traded this stock. And it makes me feel really good because, you know, I love Paul. I love Kanal. I love Paul. And when I take a trade and then Paul comes out and says, buy this, man, you know how good that makes me feel, right? I mean, these guys are outstanding. They're some of the best in the world. And to know that I'm following along with these guys really makes me feel good, right? So here we have a big sell-off. So you can see we have a downtrend right here. I draw trend lines on everything. Anyone who knows me, have ever seen my charts, I have trend lines constantly, all kinds of stuff, right? So you can see here, and I usually index off the shoulders. So here you can see we've got this extended down run, right? This ETF basically went from $50 all the way down to $20. Stop and think about that. Well over half its value, right? It went down. So we have an extended downtrend, right? It's under the trend line, an extended downtrend. Another thing that we see is a lot of times in these bottoming patterns, you can see this 9 exponential right here. See how it creates this big void away from this 9 exponential right in here? That's a good sign that it's way oversold and it's starting to bottom, right? Also, you can see that, and please forgive me, I can't explain all of the indicators to you. I don't have time, but you can see we're out of the Bollinger Band over here, right? So it means we're way oversold. Look what happens. This thing starts to hold a level. See how the wick of that right here? And look, once again, look at that long wick right there, right? That's a sign that we're bottoming, right? It's not green. It's a hammer candle though, right? So if you would have bought on that signal right there or took a partial, you wouldn't have been in bad shape at all. You would have been in pretty good shape. We're holding that level, right? And all of a sudden, look what we have right here. See how this green candle completely engulfs the candle to the left of it? The open and the close completely engulf or swallow up the red candle, right? It's bullish engulfing. Also, I talked to you about capitulation. Look at this huge selling on this day. Look at this. How would you like to have been the poor person that was holding this and it was sold right there at the wick, at the bottom, right? Terrible, right? It's got to be a terrible feeling. I used to be that guy, by the way. So don't let me sit here and ever act arrogant. I used to be that guy. But so you see this capitulation volume, right? The sheep are all being led to slaughter and they're out. All of a sudden, people are buying now. You get this bullish engulfing signal. It's go time right there. It is time to buy. And all of a sudden, look at your volume. Your volume starts to be sustained too. See how you're having higher green volumes? And look at this. You can see the stock lift up from 20 to $26, right? Did it in 1, 2, 3, 4 weeks. So basically in about 4 weeks, what are you up? 20, 25%, right? Roughly. Not bad, man. 25% a month. Who would not be happy with that? It's got to be a good time. So anyway, I hope that chart helps you. I think that illustrates very well what a good bottoming pattern is. Let me go on. I want to talk to you a little bit too about the multiple time frames, but daily and weekly. My charts are going to look insane to you, okay? I'll explain to you briefly what's going on here. This is AMD. Remember I was talking about microchips. Intel used to rule the world. AMD, Lisa Su, it really turned that company around, right? So talking about changes in leadership, knowing that things that are going on. This chart's dated. The stock is still running, right, to this day. But over here you can see in this daily, right? So look over here to the daily, right, on this chart. You really don't see anything over here, right? Let's just run up. See how it pulls back and I have that yellow line? That's my trend line that I draw on everything that I talked about. So this stock runs up and it pulls back. These are entries that we're looking for in these pullbacks, right? Because we're getting a stock that's in an uptrend. We're getting it at a good value and hoping for a push higher, right? Well, look what happens. If you were not looking at the weekly, you probably wouldn't see anything over here, right? But looking at the weekly, this is what I see. See how you have resistance here? It's a top. You have resistance here. You have resistance here. Now look over here. You've broken through the resistance. You've pulled back. So now this previous resistance that becomes support right here, right, is that point right there. You know it's go time. And also, I talked to you about the moving average on the weeklies, right? Don't ever ignore the weeklies when you're swing and position trading even, right? Look, you look at the 9. See how it runs up? It pulls back right to that 9 exponential, right to that support level. Big Daddy is always talking about double support. Double support is better than single support, right? And look at that, go time. At 15, next thing you know, it's at $20, right? One of the reasons that I do that. I'll talk about my layouts here in a little bit and why I use some of the information that I do. I want to talk to you now real quick about trading momentum stocks. Josh, am I doing okay on time? This is going a little slower than I thought. Okay. Okay, there you go. Josh says, you're doing good, but you can go faster. I don't want to put you guys to sleep. So trading momentum stocks. This is going to be the last subject that I talk about before I show you layouts. Momentum stocks. What are momentum stocks? The ones that I look for, they're gapping up at least 5%. And they're fresh levels. Like you can see Sam Adams beer, who doesn't like beer. This stock is moving, right? It's on an uptrend. So I want to look for stocks that are up at least 5%, gapping up to fresh levels. I want them moving due to a catalyst. In the case that I trade, this is one of my bread and butter setups. They're moving because of earnings. Also, relative volume showing conviction behind the move, right? So I want to see volume. I'm going to show you basically how to scan for these, what levels to watch for, a brief introduction to trade entry and management on these. And I do need to give Kunal and Paul the acknowledgement because once again, not an original thought here. What I do is I go to FinViz. This takes me about 20 minutes every night. It doesn't take me a long time at all. I run a scan. I'm looking for stocks that are up at least 5%. You can see that's highlighted 5%. I'm looking for average volume over 200,000. I want to make sure the stock's liquid. I want to make sure I can get in and out. Kunal talks a lot about making sure that the stocks are liquid. I want to look for relative volume. So I want a relative volume burst of at least 1.5 its normal volume. I want the move up to be accompanied by volume, right? It makes it real. It helps make it more sustainable. Also, earnings date. I want to know the stocks that gapped up today. Because some stocks report after hours, you have to run this today, and then you have to run it yesterday after closing. So you have to click today, click the down arrow, run it yesterday after closing. You get a list of stocks, right? One of the stocks that came out of this was ADSK, Autodesk. You can see, why am I interested in putting Autodesk on my watch list? Because it's gapping up to fresh levels, right? So it's not like if this stock was down here and it gapped up to here, it's not up into a fresh level, right? This is like a big breakout move. You can see that. You can see you have resistance. Draw a straight line across, right? You're kind of got a resistance level there, right? Look at this. I mean, it breaks out, right? These are the stocks that we're interested in. because they don't have all those overhead resistance levels we have to deal with. So it's exhibiting a move of greater than 5%, absolutely. Volume that's greater than 1.5 times its relative. Look at this volume behind this move, right? A lot of volume. Also, this stock is closing strong, which means that this didn't gap up to here, run up, and then come all the way back down and end up red for the day. It closed up near the highs, right? The body of that candle closed up near the top of the wick, near its highs. This is a stock that I'm interested in, right? This one goes on my list. So now, what am I looking for? This slide, I think, does a great job of compiling the information and the knowledge that I've gotten from Kunal and Paul, right? And so basically what I'm looking for is here you can see the gap up candle, right? A couple of things are going to happen with this stock, and this happens again and again like clockwork. This is very repeatable. You can do this every quarter, right? This is why this is one of my bread and butters. This isn't something that happens every once in a while. These things happen again and again, time and time. So basically what happens, you'll have this gap up. You'll either have a consolidation where price will go up here, it'll consolidate around the top of this candle for a while, and then it'll break. That break of that consolidation is a potential entry. Sometimes it'll consolidate, it'll break, it'll pull back. The top of the body of that candle is a resistance level initially, but it will become support level. So if you retest that and you get a strong candle, right there is another entry. And I'm going to show you examples of these, so don't worry about this. It's going to become more clear. Also, the base of this candle, the body of this candle, this base area, if we see a pullback down around, now once again, these are areas. They're not discrete exact lines. They are truly areas. And you see a strong candle down around here, that is another potential entry. Also, you can see the 9. Look at it starting to swoop up, right? Is that 9 exponential, the moving averages are coming up. Even the 20 exponential coming up, or the 20 simple. I prefer 20 exponential, but these moving averages coming up. When you see price start to bounce off of those moving averages, or you see price under it and then remount the moving averages, that is a go signal as well. The other thing that's very common, I love these, they tend to work phenomenally well, is that here you can see Autodesk ran up, it formed a resistance level right here. You can see how it went up, pivoted back down, and you can see we have previous highs right here. If this stock were to come back down, form a strong candle right here, that's another go. And the last place is at the gap fill. You can see that the gap fill is at this price here. If price would trickle down over time, fill this gap, put in a strong candle, that is another potential opportunity to run. So we look at consolidation or break. Here's an example. This one is AGO. These are all stocks from this quarter too. This is not something old. These are all stocks that are happening right now. But you can see how AGO gapped up. Look at the volume. See how it consolidated. Then you see the break, right? It ran up. If you miss this break, don't worry. You're getting a retest right here. You can see the 9 exponential coming up supporting, right? So you see that retest. Here, ATRC, some of these do not have the strongest candles in the world at these points, but because I wanted to use current stocks making moves, I went ahead and used them. So here you can see this stock, it gapped from here to here. Look at the high relative volume. You can see it ran up a little bit, it pulled back. Looked like it was going to find some support here, actually came back down. See how it's sitting right on that 20 exponential? Moving averages with positive slope, price above, tend to act as support. You have a previous resistance level, and even kind of a hammer looking PG. You can see it gapped up, see high relative volume, actually pulls back, puts a hammer candle, actually broke a little bit below right there, but to that gap fill, and you can see once you got the hammer and then how the stock ran again, right? So you see these levels that I drew earlier work again and again. The other thing that you see here is you see a gap up, a run up, you see a pullback, you see the 9 exponential. Can all talk to you about these patterns yesterday extensively. You see the strength of this candle right here, right? In the area of the 9 exponential, and then look, it went up. And of course, you've got some resistance up here in that level. Here's a beautiful flag. Canal loves to trade flags, and we talk about flags a lot, and this is great. FLIR, you can see it gaps up from here to here, volume. You can see it form this beautiful wedge pattern. 9 exponential comes up right here. That's an entry. Look how little you're risking. just stop will be underneath the 9, and you can see that the stock just lifts and takes, right? Once again, resistance level here, stock gaps up, Hasbro, huge volume, pulls back, starts to find some support here, kind of bounces around, retests that level. Do not be nervous. Retests are common, right? Previous resistance becoming future support, and then the stock lifts off, right? Apple, you can see Apple. Everybody knows Apple stock. Gaps up, runs. See this beautiful consolidation. Start to get a break of consolidation. See your 9 curling up and under, like Kunal talks about again and again. And you can see the stock breaks and starts to move higher. This is Ruth's. I think it's a restaurant. Ruth Chris, I believe it is, steakhouse. Stock gaps up, goes up, pulls back. This was previous resistance. I kind of cut this off over here. Now it becomes future support. See the 9 exponential coming up. Stock starts to bounce and then takes off, right? Positives. It's got a catalyst, right? You want to know what the catalyst is. Is it a catalyst behind the move? You want volume. Volume tells you if it's sustainable. You want a strong close on the day of the breakout. You want low float. Low float is a stock that has maybe less than 50 million or less than 100 million shares. Not like General Electric that's got billions, right? Low float stock tends to be more volatile. We like to trade stocks that move and that are more volatile. Also, high short interest. If a stock is shorted a lot of borrowed shares and people sell them in the market, you make money as the stock goes down. If there's a tremendous amount of high short interest, you'd say, well, why do I want to buy that? That sounds terrible. People are expecting it to go down. What happens if the stock starts to pop? Those people will get nervous. They start buying to cover. So they've shorted. They're buying to give their shares back to the broker. That's how you close your short position. So they're buying. All of a sudden, it's bumping that stock up. So high short interest is very, very important. You want strong candles at key levels. This is so important. Another one of my core tips in humor. Strong candles at key levels, strong candles at key levels, again and again, right? So at those key levels that I talked about, you want to see the hammers, the bullish engulfing, gap ups, and BACs are super important. Those enhance your probability. If you can have a smaller candle, and as long as your risk is small, it's okay to go ahead and take that trade, right? Remember, you're 2 to 1. I love to trade options. I got some option stuff on here. I do not want to go through that tonight. If you have interest in options, please ping us on here, right? Maybe we can come back later and do something options related, but I do not want to bore you guys with that. So just say, hey, yeah, I think options are cool. I'd like to learn something more about them, or maybe you already trade them. Real quick, my layouts, no paralysis by analysis, right? People say, man, that's too much on there. I'm going to explain to you what I look for real quick. I use this this is my swing position layout, if you will, right here. So let's see, you see Tesla, and this is an example. This is a daily chart over here. Here's your weekly. Look at your trend lines. See how nice they are in the weekly? It takes away all the noise. Over here in the daily, like there's just more noise, right? So this kind of helps you with my trend lines. You can even see right here in this little pullback area, right? The other thing I'm going to show you is look at Tesla too, this big pullback. It's at the 200 moving average on the weekly. When you look at the daily over here at around that 250 level, you don't really see anything. You see kind of a previous support level over here, and you're watching that. But look at that. That's right in the neighborhood of the 200 on the weekly. That's why I think it's good to watch the weeklies, especially when you're swing trading, right? And once again, I'm convinced the big guys trade on these. I have all kinds of indicators in here. These are the sectors, right? So this is how the entire sector's doing. If the stock's doing great, but the sector's doing crappy, I want to know what's going on. Or if the sector's doing great, but the stock's doing crappy, I want to know that too. How are its peers doing? So these are the sectors up top. I run volume, is extremely important to me. I look at stochastics. I look at money flow. I want to know what kind of money's going in, money's coming out, right? It's important. Are things being accumulated? I look at check and money flow. I either use stochastics or RSIs. I like money flow a lot. On the weekly over here, I look at volume, stochastics. I look at revenue. Look, you can see the revenues going up, right? Earnings per share are going down. Be careful looking at earnings per share. As a company buys back shares or sells shares, they dilute. They can condense those shares. The earnings per share get changed. So be very careful here. Remember, revenue is king, right? So Wall Street loves companies that are growing their revenue. If business is increasing and there's demand for your product, a lot of times you can fix inefficiencies in your systems, right? So I tend to pay a lot of attention to this. I look at PE ratios for long-term trades. I look at debt to equity. If you've got a tremendous amount of debt and not very little equity, you're going to have a hard time borrowing money. You could be a bankruptcy candidate, right? So this is more for position trading. Once again, checking money flow in the weekly, and I look at the money flow index. I use options, so I look at option tables. I won't go into that a lot. And here's on my watch list over here. I pay tremendous attention to what's going on in the markets. I look at the T2108. It's basically an average of all the stocks. So I want to see what the average of all the stocks are doing. I want to know what the NASDAQ, this is an ETF on the NASDAQ triple Qs. Is it oversold? Is it overbought? Are we at resistance? Are we at support? I like to know that. I can look right here and see it. If the stock, which it tells me up here what index it's in or what market it's being traded in, the S&P is right here, and then the Russell 2000, the small caps is right here, and also here's a fundamental sector in the bottom. My morning gappers, if I'm going to day trade, typically what I do is I like to watch all my stocks on one screen, right? I can catch moves. CLF, you can see the break of the pre-market high right there. Yellows in pre-market, stock runs, right? So it helps keep me from missing moves a lot of times if I can watch all the stocks at one time. It seems pretty tough, I know, but you get used to it. For day trading, I've got my daily up here. I've got my volume. I'm watching my markets. I want to know if the markets are going up, they're tanking. I watch UVXY. It's like a panic index of the market. I've got my 1 minute or 2 minute, what I use first thing in the morning. As the day goes on, I switch to longer time frames. I've got my 5 minute, and believe it or not, I use the hourly. So I like the longer time frames. I know that amazes people with day trading, but you can see here how it was resistance, resistance, resistance. Now you can see it gaps up, pulls back, and it's actually acting as support level right there, right? You can see these on the daily, but sometimes the hourly cleans this up and makes it much, much more readily available, right? Or more visible. So volume pattern sectors, I've got all my watch lists down here across the bottom. I know it looks like a lot, but believe it or not, after you get used to looking at it, it's pretty simple. Intraday trading, I know this confounds people. Sometimes they laugh. I watch 18 stocks at one time, right? Like if I'm going to intraday day trade, I'm looking mainly for breaks and certain patterns, right? I can skim every one of these stocks. I can watch all 18 stocks. It takes me less than a minute, probably about 30 seconds to see if it's making a move. A lot of times I don't have to look at it again for another 5 minutes if I'm on 5 minute candles, right? Sector analysis, I pay a lot of attention to. So I go through, I want to know what the sectors are doing. You can see this is a steel sector I talked to you earlier about. They behave just like stocks, right? It's a consolidation of an average of the stocks, all the steel stocks. You can see we have resistance, It breaks through, it runs back. This previous resistance now becomes future support. It comes back to this level, and look, they start to bounce, right? So you see these levels again and again, right? So if I'm in steel in here, since they will tend to move together, I want to know where I'm at. I pay tremendous attention to the markets. I want to know what the markets are doing. Am I at resistance? Am I very oversold? Am I very overbought? Am I very extended? So I'll do a lot. You can see these lines on here. I do a tremendous amount of market analysis. If it's been running for a while, I think we're due for a pullback. I'm starting to take profits. I'm not buying as many. If we're oversold, I'm starting to see candles in the markets. All of a sudden, guess what? I'm starting to put stocks on. I'm starting to buy, right? So like Canal says it, I've heard it 100 times too. Man, rising tides raise all ships, right? So if markets are going up, even some of the bad stocks will get pulled up, right? So it's important to know where you're at. T2108 is an average. They'll talk about divergences, right? But if an average of all the stocks, if it's moving up, okay, or if it's going down and the S&P down here is going up, then what happens? Fewer and fewer stocks are starting to participate in the gains, and your foundation's starting to crumble. They go over that much, much more in the boot camp, so I don't need to go over that more and more. Lastly, I'm a trader, right? So we all like to show pictures of our setups. You'll kind of understand why I run some of the screens that I do. But this is my trading setup. I run 3 43-inch 4K Dells, but my layouts are designed to run on a laptop. So believe it or not, if I'm traveling, I can run these on a laptop. You can see right here's a water bottle, so it kind of gives you some idea of the screens. That's another reason I wear these funny looking glasses, because there's so much blue light given off by these monitors. Even though I've got the brightness turned way down to only about 10% on there, it helps me sleep better at night. So that's one of the reasons I do that. Basically, my thoughts on the market is, man, the market doesn't care about you, who you are, how hard you tried. She will embarrass you. She'll take all your money. She'll leave you homeless, naked, hungry, and cold, right? So it's up to you to get educated and not let it do that. And it's very possible. Trust me, it's possible. basically, I want to conclude. Thanks for putting up with me, and this has went a lot longer than I actually had anticipated. But I made this very personal, and please forgive me. I hope I didn't bore you guys with any of that. But I want to let you know who I am, how I trade, because it affects everything that I do in my life. And I love my family more than anything in the world, man. They mean the world to me. My wife is incredibly supportive. I remember we've had conversations where she asked me, she goes, "How much money did you make?" And I'll tell them, "I made $30,000. And she's like, "Oh, that's great." Doesn't even care. She doesn't really care about the money, right? It's amazing, you know? Then she'll, "How'd you do?" "Oh, I lost $1,200. I remember one time we were having a discussion because you're going to have bad days trading, right? I remember I lost $1,800. I don't remember the exact number. And I was talking to her and she goes, "Honey," she goes, "how much did you make the other day?" So I don't know, it's whatever it was, like 8,000 or whatever. Made $8,000. She goes, how much did you lose today?" So 12 or $1,800. She said, "Do you know how long I heard you talk about the $8,000 that you made?" And I go, "Baby, I've got no idea. I don't know." She goes, "About 15 seconds. You said, I asked you how you did." "Oh, I just made $8,000. "Oh, that's great. I'm proud of you." She goes, "You know how long I listened to you bitch about the $1,200 that you lost?" I said, "No, sweetheart, I don't know." She goes, 20 minutes. She goes, "Oh my gosh, it's part of the game. Shut up, you big baby." You know, I mean, she's awesome. She's super supportive of me, doesn't care about the money, wants me to be successful, knows I'm happy. And, I mean, she's a special woman, right? I love her tremendously. This is my beautiful son. He's 5 years old, smart as a whip, could read the New York Times at 2.5 years old. At 2.5 years old, he could read the New York Times. This is a picture of him right here in his Batman shirt, sitting with me. This child recognizes stock patterns. He recognizes flags, flat tops. You can ask him, "Eli, what do we do on the third day of a hard sell-off? What are we looking for?" He'll tell you, "We're looking for a hammer candle." "What do you do, Eli, when we see a hammer candle?" "We buy." "Where do we sell it at?" "We sell it at the BWAP, Dad." I mean, it's amazing, right? I always joke by the time he's 7, we're going to have Goldman Sachs recruiters showing up at our door. But it's a skill that can be learned. That's my whole point behind the conversation. Anyone can learn to do this, right? You just have to be tenacious. But anyway, why do I trade? I trade for security for myself and for my family. I trade for retirement. I trade for my peace of mind. I trade to leave my son a wealth bucket, right? I want to leave him something. I give thanks to Bulls on Wall Street, and I always get verklempt when I talk about my family, so please forgive me. But I want to thank you, Kanal, and I want to thank Paul. You guys have my respect and my utmost admiration. I hope I never embarrass you with my comments, but you guys mean the world to me. You've truly changed my life, and I thank you. And a couple pictures of my superheroes here. Lastly, before I close, I need to tell you, when I got to meet these guys in Dallas, my wife told me, she goes, "Honey," she goes, "don't embarrass yourself. Please don't act like a groupie over a couple of rock stars," right? Because that's who these guys are to me, man. They are my rock stars and they are my heroes, as corny as that sounds. But anyway, listen, I want to thank you so much for putting up with me. I hope I did not move too slow. It's hard for me to read some of the comments, so I do apologize. It's been a true honor for me to be in front of you guys. If you do have any questions, I invite you to please email me. This is my email address, bboyd01@hotmail.com. And please forgive me. We are very, very busy right now. I work, and of course, with a 5.5-year-old, we just bought a little condo on the seawall down in Galveston. So we get on there sometimes, we hang out and stuff. So it's a good time, but it's busy. I promise I will try to get to all of your emails. If you have questions, please don't hesitate to ask. I want to help. And that's one of the nice things about being around people who trade, right? We tend to be very helpful in trade like that. That's all I have. And Kanal, you can take it back over right now. And I want to thank you very much for the privilege of being able to speak. Josh, do I need to do anything for him to take it over?
Right here, buddy.
All right. I hope I didn't embarrass you, Big Daddy.
Not at all, man. That was awesome. I was watching it too.
All right, good.
Nah, you did good, man. You're natural. Guys, so guys, give Brian a big hands, round of applause. As you know, he's not a professional presenter, and he did a fantastic job. That's always one of the tough things when you're thinking about, doing webinars and stuff with traders is, they're traders, right? Like, but giving a good webinar sometimes is a little bit of a different skill set. The best trader could have the worst class, but Brian did a fantastic job keeping it entertaining and light and emotional and informational, and that's really, really awesome. Guys, we are going to open this thing up to some question and answers. Remember, we are starting our boot camp. It's coming up in a few weeks, our 60-day boot camp, the class that Brian and so many of our awesome students have taken. Guys, trading is really one of the hardest things in the world to learn. And when you look at it at a bird's eye view, if you don't have the right information or the right kind of mentorship, you can't learn trading from watching videos or, just watching some DVDs or doing this online. You've literally got to go in and learn this thing live, right? You've got to actually have real mentorship to be able to pull this thing off. And I think that's important, and that's kind of some of the stuff that we do. So that's why our boot camp is so long. You need all those classes to really, really get you going, and then you need that lifetime access. Like somebody like Brian, who's been with me for a while. He can still come into any boot camp class he wants. He's got a lifetime access, and so that's really important to have that kind of relationship with people for a long time. So we do class 4 days a week. Sundays, Tuesdays, Wednesdays, Thursdays, 8 p.m. Eastern time. During the trading day, I am trading in front of everybody live on screen share, walking everybody through what it is that I do so that you can learn in real time. It's really important to take the book knowledge and then apply it to real-time application. But the other part is it just gives you confidence, right? You need to see your mentor go out and actually make money. I keep my trading platform up and I'm hitting all the buttons, and you see like the losses and the wins, like the good, the bad, the ugly, every single day. That's the only way you can really learn for real. So all of this stuff is recorded, it's archived. I keep it on the website. So like for a lot of you guys I know we get a lot of Europeans and people living in Asia and stuff, we have it all on the website. So it's like your class webinars, everything you need, your quizzes, your homework, but of course the recordings of class too. So it's all situated in one, and you can even watch boot camp class from 3-4 years ago. I've got them all right up on the website, so you can even watch the old ones while I'm doing live courses. And yeah, you need that lifetime access, because in the end, life gets in the way. You're going to have birthday parties and job and kids and stuff that comes in and out. And sometimes you may need to go through live class a couple times, right? Like, because life just gets in the way. So that's where being able to retake class is really, really helpful. We make this a university style setting, where it's like question and answer, quizzes, homework, all of that stuff. Most importantly, we recap the trading day, at the end of the day. So I trade live in front of everybody, but then I recap like actually what the heck it is that we actually do, in terms of the trades. We walk through every single trade I do, and then we rewind the tape. How did I find it? Why did I trade it? What was the advantage or disadvantage? A lot of times it's just me talking about the screw ups, right? Because I don't win every day. So that becomes really important. And then of course, we put the students on trading simulators so that you guys can start trading the strategies, which I think is going to be really important. If anybody is taking the next boot camp, make sure to, put in your, phone number. That way, phone number and email, because I got to get you my scans and my TC2000. Guys, you can paper trade and simulate right from here. And I show everybody kind of how to do it and walk everybody through all that stuff. So you guys will have full access to any technology that I have, the scans, the layouts, everything. So that's always going to be a huge. Then we got a private student community where people can hang out and chit chat with each other. 200-page course book. Hot damn, this course book. Let me see if I can find this thing. It is one of the hottest course books around. Dun, 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 dun. So, we have everything in a course book. You can put this thing next to the toilet. It's literally a trading the trading Bible. Like everything I know about trading is right in here. And so you can start reading this thing, and I'll send this to you in the next 48 hours. For anybody that's getting in on that early bird pricing, you'll have the course book and be ready to go. 3 months of chat room, screen share during the market. We're running that early bird special. So put in your email, put in your phone number. If you just want to have a call and talk about what we got going on, if you want somebody to walk you through, answer your questions, we'll do a trading consultation. My guys here, Mary Beth and Omar, have been with me forever. Mary Beth was one of my first students. So this lovely lady over here, I patterned the boot camp off what I used to teach her when I was teaching her one-on-one. She came to me right after college. If you're a new trader or like a parent, she's like a new parent of 2 little ones. She has like really, really good insight into how to be 29 years old, have 2 sons running around the house, help run a business with me, trade and do all that stuff. So she's a great person to talk to. So drop in your phone number if you want to hear from her, talk about your trading goals, and we will do this because, guys, this stuff is hard, but if you have the right team behind you, then all of a sudden it gives you a shot to really get there and do it. It's the same thing like, for me, I have a business coach, right? Everybody needs a coach. I had a trading coach in Paul who works for us now. But like a business, I didn't know anything about business when I started this business. What do? I can either spend 10 years trying to figure it out, or I hire myself an elite coach who is as involved as I want to be, somebody I really mesh with. And that's how you get better. And within a couple months, I've got 10 years worth of experience kind of splattered at me. And then it's about me kind of going in and running with it. So that's what we do here at Bulls. So guys, if you want that early bird pricing, put in your phone number or your email, and I will have somebody reach out to you, get you on the phone, get you that early bird pricing. We'll mail out that course book right away, and you'll get back-end access to the website, so you can start even watching the old boot camps. Even before class starts, you can start watching boot camp class right now. So you don't even have to wait for our next live class. You can go through this past boot camp and then still come into live class and get this party started. Guys, it's been super fun. As always, it's an honor. I'm going to open this thing up to questions for Brian because I know a lot of people have some awesome questions on what the heck he's doing and what's going on. So, Brian, if you can give us 10 minutes here, I've written some of these things down, and we can chat about these things. So, first things first, let me see here. A bunch of people have asked about indicators. How do you Gino is asking, do you use stochastics or other types of indicators, and how much of an impact do they make on your decision making? Which is a really good question.
Yeah, Big Daddy, once again, I'm going to be a parent, right? Everything that you've taught me is how I use them. So Canal always taught us that what you're doing basically is like you're building a case. You're like an attorney and you're building a case. The better that case is, the more evidence, the more conviction that you have, the better probability that that trade is going to work out, right? So what I do is I look at stochastics, and I'm aware of them, right? Like, yeah, it's oversold. So what am I doing? I'm looking for a bounce here, right? I don't let them guide me though. Like, just because 2 lines cross each other does not mean that I buy. And one of the things that I should have mentioned too is there's no holy grail out there as far as indicators. So don't spend your time wasting looking at them. Everybody will want to sell you a package that's got these 2 lines crossed, and you buy this crossover and you sell, right? It's not existent, because if it was, it would be easy and everybody would be doing it. So I use them to help build my case, whether I'm bullish or whether I'm bearish or whatnot. I hope that answers the question.
Cool. From Matthew, someone has very little experience with trading. I'll take this one. And don't know all the terms. Is the boot camp right for me, or is it some other program? Guys, so one of the things I probably failed to mention, in the trading boot camp, we start everybody off like they know nothing about stocks. They know nothing about markets. I believe that whether you have experience in trading or not, it's important to spend, and we only spend 3 classes doing it out of all of them, but we spend 3 classes just building the foundation of the terminology and what everything does. Because if your foundation is weak, then once you start adding really advanced strategies and things that are complicated, you're not going to be able to really learn them fast. And so we all start off at the dead beginning, and then we layer on every single class more and more concepts while also reinforcing the older ones. So we're always layering on new ones slowly while constantly reinforcing what we have learned so that we start to really understand what's going on. Bum, 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 bum. A few people, Brian, have asked about the brokerage platform you use and what kind of rates you should be getting for options trades.
Yes, I typically use Interactive Brokers. I think that they're a good broker, and I think they're pretty aggressive. I know a lot of option traders like Tasty Trade, and any of those. There's a number of good ones, but those are a couple of premiums right there.
Dun, 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 dun. Puma is asking a little bit about like how do you use relative volume?
Okay. So when I talked about relative volume, it was on the day of the breakout. So
Okay.
basically, what relative volume means, you're looking for 1.5 times the relative volume, or 1.5 times what the average volume is, right? So the higher the volume, the more oomph, or the more believable that the move is. And it's a momentum stock, right? So if you've got a small float and you get a lot of volume, you're going to get big moves. So I tend to watch the volume dramatically. It'll show you that if a stock's being accumulated, like people are buying and holding the shares, or if it's being distributed, right? Like they're selling at the tops. And it's whether you're getting the high green bars or high red bars. So that's how I use it. Hope that answered good.
Awesome. Bum, 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 bum. A couple people have actually asked, let's see where to go. Andrew's asking, who would you do options? Would you do options like if you had a small account, like, and you were trying to grow it?
Yes, I love options. Options are one of my favorite things. But what I always tell everybody is that you got to know how the stock moves, right? And that's why it was a beautiful compliment to Bulls on Wall Street in a 60-day boot camp, because options are leveraged, right? So it's a bucket of 100 shares, right? And you could buy 10 contracts, right? So you can literally, you're in control of thousands of shares, and you're using a little bit of money to do it. So you're using a little to risk a lot, right? So you have to know how the stock moves first, because if not, it's a terrible analogy, but I always say it's like giving a loaded handgun to a 5-year-old, right? If you don't
Yeah.
know, it's going to end up bad, right? Unless you know what you're doing. So that's the best analogy there.
Cool, 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 cool. Bum, 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 bum. Akeem, I got you, man. We'll have somebody give you a call tomorrow. Looks like a lot of you guys are hopping on that early bird. That's awesome. Matthew, we'll give you a call tomorrow. A pleasure to have you on the team. Vasilos, my Greek brother, pleasure to have you on the team. Aaron, good to see you, man. Pleasure to have you on the team. Guys, if you need to talk tomorrow, just write down your phone number, and we're going to get this party started and make sure that you guys have a good trading consultation, figure out where you got to go with your trading career. A couple more questions. Can you recommend the iPad app you use for trading? TC2000 iPad app isn't that good. Do you use any other charting softwares?
Yes, I do. There's a piece of software I do use TC2000 a lot, actually. I actually like it, but you have to get used to it. But there's a program that I use for iPad or for iPhone. It's called Daily Stocks.
Really?
Daily Stocks, and it works pretty well. You might like it. It even has candle pattern scans and that kind of stuff.
Yeah, I'm gonna dig into that too. I'm always looking for good apps. Yeah, the TC2000 app takes a little bit of work. On the iPad, it's actually really good. On the iPhone, a little bit harder, but everything's harder on the phone. iPads are awesome. Dun 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 dun. Let's see here. Hold on here. I got a couple more questions. And by the way, Brian, everybody's giving you really, really good feedback. Eric says, love the tenacity. Poom Poom, are you guys going to make any trading and traveling videos? Maybe. I mean, I don't plan on I don't plan on hitting the move right now because right now the heat is just starting to dissipate in Florida. September, October is like the best months here. Mark, good question. Mark's saying, what if you cannot make the live webinars? Will we still get mentoring? Mark, 100%. So look, this is my cell number. If you're starting to watch videos and you got questions because everything's recorded and archived, you know what you do? You just call me, right? Also on my team, like you're talking to Josh right now, he's a trader. You can call him. We even have a calendar you can set up to get some help. So that's the other thing is I'm always on my email and FaceTime and stuff. And so like, look, when you watch a recorded class, sure, it's not as fun as coming into live class because it's the information is the same, and we'll make sure your questions are answered. Good. Anybody else got any questions? Did we miss anything? Guys, when you get a big webinar with a lot of people, sometimes we miss questions. So if anybody else has one, by the way, Brian, a lot of people are asking about those glasses. Do they come in prescription? Zephyr wanted to know.
Yeah, they do. Real quick story, but anyway, they're supposed to block the blue light. You can probably see blue light being reflected. Blue light, supposedly, in a Harvard study, blocks the production of melatonin, and it'll make you stay awake at night. I was staying up till 2 a.m. I couldn't go to sleep when I went to bed. I started wearing these, psychological or not, I don't know. It doesn't care. I fall right asleep. I think these are by Swanwick, SWANWICK, computer glasses. And yes, they do come in prescription too. So.
Sweet. Dun, 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 dun. Somebody said you look like Bono. Aaron Smith, how much money should we have when we start up? Aaron, trading is one of those interesting things. It's like in anything in the world right now, the more capital you have, it's just easier to make mistakes. It's not the end of the world when you don't have a lot of capital, but it gives you, when you have the more capital you have, the more room for a margin of error, I guess would be the proper terminology. The more margin of error you have. So that's just something, that we all have to deal with, but not everybody's just born with, right? Tens of thousands or hundreds of thousands of dollars. We've got to start somewhere. So, $2,500, $5,000, whatever it is that you can do to get started, we've got to just make do with it. But yeah, I mean, it's frankly just a lot easier if you had 100 grand, there's a lot less stress on you to make something happen than if you had 5,000 grand. But it's not necessarily the deal breaker. When you think about life, there's, obviously having more capital gives you an edge, but there's other ways to even that out. You can have an edge, in strategy. You can have a strategical edge in a game or in war or in trading or whatever, right? You could have a strategical edge to win. You could have an edge in having more resources, obviously, which older people or more people with more established are going to have something like that. But you can have an edge against your opponents in the field with discipline, right? Having more discipline than somebody else is an edge, right? And that can even the playing field. Your work ethic, which is something you can control, can give you an edge. That was one of the things I think, and Brian was telling you the same thing. In the beginning, me and Brian both, we both got our edge from the actual work ethic of looking at thousands of charts every day. So even though when I was starting trading, I wasn't coming in with millions of dollars or hundreds of thousands of dollars of capital, right? I evened the playing field by outworking everybody, right? Going through thousands of charts a day, practicing journaling, reading charts, all day, all night. You'd always see me on the laptop. One thing on TC2000 that's awesome is you only have to use the space bar to flip through charts. So this is what I would do all day. I mean, I would just go through almost on a Sunday, I would go through every single stock in the market, the high on the TC2000, they have a high cap 1000. So I go through I just be screw it, man. I'm just going to go through all of them, and I would just go through them to start understanding how things move and where the trends are and where the cool stocks are. There's stocks that you'd never even hear of sometimes, right? So just flipping through these things can really help. So there's different ways to get edge. So you don't always let like capital be, your sole defining characteristic of whether you can do something or you can't do something, because there's other ways to even that playing field that can come from internally. So that's a really good question. Dun, 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 dun. Antonio Antonil is asking, Brian, do you use different accounts for your day trading, swing trading, and position trading, or is it all just through one?
Now, I use two different accounts, actually. I have my aggressive account that I do my day trading and some of my quick option trades. And then I have another account that I'll do swing trading, position trading, and I sell options in. So I have two different accounts.
Cool. Dun, 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 dun. A few people have asked, like Bharat, do you use any news service like a Benzinga or Trade the News or anything like that?
TC2000 actually has a news function in it, and it's like MT Newswire, I think it is, or whatever. I do subscribe to that. And also, if you go to TC2000 Cloud, you can select like Yahoo Finance, and whatever you're looking at in TC2000 will show up on, I think it's TC2000 Cloud, I think is what it shows up as. Like TC, if you do a search for that,
Yeah.
TC2000 Cloud. So click on finance sites, and then you got to put in your info. But whatever you're looking at on TC2000 will show up in Yahoo Finance. And what's really nice is it shows you like revenue trends, shows you analyst ratings, shows you a bunch of other information that can give you a real quick pick very quickly as to how good a stock, basically like analysts and revenue, and even shows you earnings per share, like misses and projections for the future. So it works really good. So I like that. It'll give you a whole bunch when you pull that up, but it's Yahoo Finance, and I really don't use Yahoo for a whole lot else, but it works really good for finance options. So yes, subscribe through TC2000 to the MT Newswire.
Oh, you know what?
Also, if you saw my charts at the bottom, you can get a lot of stuff on there, right? Like you can get revenue, earnings per share, all that, like directly from TC2000 data. So
it's kind of cool. I didn't even actually know about this.
It's awesome.
Yeah, you told us about it in the thing, but I haven't played.
Yeah, in Dallas I did, and you know what happened is they offered a training here in Houston, and I went there. It was kind of comical because I'm not a very young guy. There you go. And if you like go down to Yahoo Finance summary, on down, up, right there. Yeah, there you go. Click on that.
Ah, I see.
There you go. Whatever you're looking at, and then you can see. So on the right-hand column, as you scroll down, it'll show you the. Keep going on down. There, you see, it'll show you the earnings per share projections.
Yeah.
Yeah, right there. So it'll show you misses, and you can see how the earnings per share have been trending. It'll show you revenue and earnings, and then as you scroll on down, it shows you the analyst ratings as well, price targets, all that. So it's pretty cool, right? Like it's a lot of good information about a stock right there.
Yeah, I didn't even see any of this.
Yeah, because I mean, we could sit and read reports all day. Who wants to do that, right? I mean, when we're looking at price action, the volume, and then with just an extra 15 seconds, man, you can pretty much know what you want to do with a stock.
Yeah, it's really cool. You got stock, twits, all different types of stuff.
Yeah. Yep.
Yeah, I'm gonna play around with that. That's actually kind of fun. Yes. Yeah, they're coming up with a lot of interesting stuff over the last couple of years.
They're awesome.
Cool. Anybody else got any questions? Trevor's asking, when trading stocks, how do I find about insider buying and selling in the ratio? Do you use that?
I do a little bit, and I believe FinViz has a section at the bottom on FinViz where they'll show you all of the insider transactions. Whether there's
Trevor, so you can use FinViz. As you guys probably know, I mean, I'm lazy. I don't do any fundamentals because my hold times on stocks average like less than 10 minutes most of the time. So I don't do any reading, because if you're going to hold something for 10 minutes, who cares?
There, if you look at the very bottom, and I think it had some stuff down there already, but if you put in an individual search on a stock, right there it's just showing you some of the recent transactions in general, but you can get them for a specific stock. So you can see it had a director, he bought at $1.59, 14,000 shares or whatever. So just do a search on the stock, and that information all shows up at the bottom.
Cool. Jorge, do we learn in the boot camp to break down a quarterly earnings report and understand everything inside? No, Jorge. We do trade around earnings and news, but we use technology and technical analysis to get in and out of them. The actual breaking down of reading like balance sheets and income sheets, stuff like that, you can go to college for that, but it doesn't really impact short-term trading. That's more of like for long-term investing. So there's kind of two different things when you think about trading, is like for one day to even like a month, stocks just run on news, momentum, and sentiment, right? And technicals. But if you're looking like 2 years out, then, obviously everything is just run off earnings, right? Earnings growth and sales growth for the most part. So, when you're looking at longer term stuff, sure, understanding what a good earnings breakout looks like what's a good sales beat or earnings beat is important, but really digging anything more than that, you may not necessarily need it. If you've got a good trending chart and you understand what in an earnings report is good for the long-term stuff, like sales growth is really usually the main thing, at least from what I've seen, then you've got really enough to make good moves. Good. Why trade two accounts? Isn't it better to just do everything in one account? So I personally don't like the mix and match stuff, Jorge. So like my day trading, I do in my day trading account, swing trading in a swing trading account. That way, like I'm not crossing swords. Like if in my day trade account, it's for income, right? So like I don't want to have some swings that like I'm supposed to hold for 2 weeks and say they're down for the day. And so my swing trades are down in value, but I haven't sold yet, $1,000. And I make $800 day trading. When day trading is what I pay my bills with, well, then it would show I'm still down $200, right? It's like hard to figure out where you're going. So like in my day trade account, it's just one thing. I need to see the end number, how much money I make today, right? How much money I make today, and that's my income money. And that's different than my swing trade account, which I'm using to build wealth essentially. So one is just this money, I take it out every 2 weeks, I pay my bills with it or whatever, right? The other one is for growth and is more conservative, obviously. Dun, 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 dun. Yeah, Marco, that could be true. I'm not familiar with the Canadian taxes. Anybody else? Guys, did y'all learn something? Did you like the format of doing something a little bit different with, having guests on? We'll try to get Brian on again soon. Awesome. No, I love the feedback I'm getting from everybody.
That's great. It was definitely an honor. I'm very, very happy to do it, man. I'm super excited. I'm excited for all you guys too, man. There's just so much good stuff in front of you. Awesome.
Mr. Worst, you could be eligible for that, or you could trade at your own broker, Mike Worst. You can trade wherever you want. If you want to, you might have opportunity to trade with me, or you can use your own broker, of course. Jesse Porter, I got you down, brother. We'll get you a call tomorrow. All right, Brian, I thank you, man, from the bottom of my heart. That was awesome. And, of course, everybody watching, we really appreciate, after all these years, I mean, it's a decade in the making. You guys keep showing up, and you keep always giving us great feedback and doing all of that stuff. Right here, Trevor. Don't you got Google? It's right all down here. Good. I appreciate everybody's feedback. Guys, do not be afraid. This is my cell number, man. Don't be afraid to reach out. Like, you got questions, man, you want to talk to the big boss or the little boss, whatever you got to do. Mary Beth's the big boss. I'm the little boss. All right. I'll see everybody till the next one. I'm thinking maybe we'll do another webinar in a couple weeks. I'll come up with a cool subject. And I've been coming on YouTube Live every day at 9:15, talk about the markets. That's been really fun having a lot of you guys in there too. So I shall see everybody in the mañana on YouTube Live, 9:15. Brian, thank you as always.
Man, my pleasure. Thanks, Big Daddy. Good luck to you guys.
Friends, it's been real. It's been fun. It's been fast. Oh, shit, contest. I forgot. I knew something. Dun, 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 dun. Arnold, enrolled _24 Axel at yahoo.com. And TJ, Prattlejohn 21 at gmail.com. You too. You guys have won all sorts of swag and some other stuff. All right, guys. Arnold, TJ, you guys message me. I'll also email you guys personally, and we'll chat and get you guys your gifts. All right, my friends. It's been real. It's been fun. It has been awesome. Till next time, my friend. I'm really excited to have some of you guys in class. I'm pumped to teach you guys what we do. All right, peace.